Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, 2019. I am Frank Ochoa, aka PivotBoss. Happy Fed Day. Today is the FOMC meeting. Later on this afternoon, we'll get the statement and the interest rate decision. And when that occurs, we'll get our next FOMC key level. The FOMC key level, for those of you that recall, is the 1 o'clock open price Central Time, 2 o'clock open price Eastern, right when the statement and the interest rate decision are released. The last time we got one of those was October 30th right here. And you can see how price took it bid and rallied to current levels. We have not come back to test this one yet. The time before that, which was September, this was September 18th here, it held it and took it offered. And then when it failed to get a new low here, it went back to it, took it bid, and then that's when the new one came out. So right now we're here. And whenever that statement comes out and the interest rate decision, we'll likely get some sort of move over the next day or two, and that could trigger the next wave of 2 to 3 to 4 weeks of movement. So if price is taken offered here, that will be an indication of weakness, as the last time here it was taken bid, this time was taken offered, then bid through it. So more strength given the current uptrending structure is likely going to be seen, but we got to see how the market responds right now to that information. Over here we see yesterday was a nice failed new low rejection day. Today you're seeing a midpoint retest, and still both days holding below the previous month's close price. Above that level starts to squeeze pretty nicely, so we'll keep an eye on the previous month's close price. Alright, let's take a look now at the NQ. You'll notice here the NQ inside day as well. Failed new low yesterday, midpoint retest here. All of this suggests more upside breakout type of trending activity as well. The trend remains intact. Not a good upper line there. The trend remains intact here within this upper trending channel. We're kind of at this lower edge. The expectation is to explode to the upside here at some point down the road, unless, again, the market takes the FOMC key level offered. So if for some reason something happens here that the market doesn't like and it goes offered, then this LVN is going to be very important. That previous month's low is going to be very important to see if there's rejection or does it just pass through it. But right now everything suggests more upside. Inside day today with a failed low yesterday, midpoint retest intact, again above the previous month's close, could squeeze pretty nicely. Alright, let's take a look now at crude oil. Here's crude. Now crude has been holding. Again, we talked about the 4-day range yesterday. Now it's a 5-day range. Look at this narrow day here today. That's 23% of average range. Just 36 ticks of range today. It's been averaging $1.55. $1.55, $1.51 on a 5-day basis, $1.55 on a 10-day. So 36 ticks is just nothing right now. Just very, very quiet price action. Again, we're going to get that FOMC key level. The last time here, it kind of went below it and then took it bid, and it's held above it ever since. Pullbacks just shy of it have been bid as well. So it's going to be interesting to see how this plays out. But right here, that 5-day range right now, the 5-day range isn't over. We still need today to finish, but it is compressed at current levels right now. And again, that could lead to a breakout either direction. Given the trend to the upside right now, if it were to break to the upside, that would be tremendous, but we're at the upper end of the channel, and a pullback back toward 57, maybe as low as 56, could be in play on a downside break. So right now, keeping an eye on this narrow range. A breakout in either direction could be rather significant and likely comes after the FOMC statement and decision later on. Alright, lastly, taking a look at gold futures. You'll see here with gold futures, this one has been mostly range bound. It's kind of been a dud over the last month of trading. It's been channeling lower overall, but even these moves have had some oomph to them here, and lately we've just kind of been in this mode, which is much more compressed than even what it was over here. So it's just really died down here lately. The market has been very bullish, and this has taken on a kind of a downward sloping channel. At some point, you know, very similar to what happened at the end of May, at the beginning of June, where this thing broke out through that downward sloping channel. That still could be in play. That pivot's going to be important, 1490, perhaps 1495. If it breaks through that zone, perhaps that triggers another wave of strength. But until that happens, we're still range bound with a downward bias, and you know, it's very hard or difficult to do much of anything at the moment. If we had to look at it right now, it's kind of in a very narrow 3-day range here after a stop run day. So if it continues to hold below 1475, perhaps there's still a little bit more downside. But right now, just inside day, very narrow 3-day range. Continue to watch that range for directional cues today. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.